I have discussed my strategy many times on the channel of buying stocks that people hate and sell them when people, love them. And it does sound much easier than it actually is in practice because a lot of people, I got a lot of comments on Twitter. Like they see me talking about certain stocks which I'm doing research on, and then they buy them. And then the stock goes down 20% on earnings. They say, hey, what happened to the stock? Well, it's not as easy as just, buying Coca-Cola or Amazon and holding it. There's a lot of risk management strategies I implement within the strategy. Like, for example, sometimes hedging my position going into earnings if it's a critical moment, or maybe, knowing when to sell the stock, knowing when to buy the stock. So there's a lot more that goes with it, which is why I have my own group where I talk about the stocks that I own, and then we do certain risk management strategies, position sizing, and a lot of things to try to minimize the downside as much as possible. And as I like to share some ideas with you guys on the channel, this is another stock that I'm researching. I don't own it yet. It's still on my watch list. And the stock is Capri Holdings. And Capri is down around 31% pretty much on Thursday on earnings, a massive drop. If you're not familiar with Capri, they actually own pretty, popular brands like, Michael Kors and plenty of other, popular brands all around the world. Now, the earnings was pretty much a disaster. Not a disaster, but they did have a lot of things. I mean, like revenue declined 6% compared to last year. On a constant currency basis, it declined 0.5%. I mean, it's not a big deal, it doesn't justify a 30% drop, in my personal opinion. Gross margins actually held up. Income from operation were actually, not really bad. The biggest problem was the inventory, which is still up 21% compared to the prior year. And it also, it represents some type of an improvement because it was actually higher. I believe last one, it was around 34% higher than last year. So it's actually getting a little bit better. But nonetheless, it's still very, very high. But the management puts their commitment in actually trying to reduce the inventory. So this is a very big risk, for the company. Now, this is the main thing with the company. They had before some analysts that were actually issuing around $7.40 per share in terms of outlook for 2023. And now the outlook is only $6.40 per share. So if we just take the calculator for their for their guidance, and we get a basic $50 per share price, and we divide it by $6.40 for guidance, which the management has mentioned that they actually included some costs in terms of inflation and a potential recession in this estimate. So it's a pretty conservative estimate in my opinion, but if we just take it, and then it's trading around 7.8 times earnings, so almost at 8 times earnings. And I believe this is pretty cheap and pretty fairly valued for such companies that's not actually declining, it's still growing, but they faced a lot of headwinds, a lot of things with their supply chain, a lot of other wholesale, and a lot of other things. You can go and read about the company and do your own research, but they had a lot of things pretty much that were pretty much one-time type of headwinds, and they really affected their growth. And especially from the currency, they declined 6%, but on constant currency it was only down 0.5%. So this is around, again, 8 times earnings. On a historical basis, the company traded around 13 times earnings, and now it's trading around 7.8 times earnings. So it's trading, a pretty discount to actually what it used to trade at before, and it traded as high as 31 times earnings. But of course, this is not something we want to bet on, but looking at a historical metric, we are actually saying that we might be getting some type of a fair deal if we want to buy Capri at such prices. But of course, we have to dig in a little bit more. Looking at their balance sheet, they have 281 million of cash, which is not bad. Their long-term debt is 1.5 billion. It might be a little bit concerning, but most of the debt is actually not due until later. But the closest date that I have is the senior notes, which are due in 2024, and this is in total around 448 million. And actually, they have it at a discount because of the whole thing with interest rates. Sometimes they, in the bond market, they discount them on the new interest rate. So it's 448 million. But because of the way it's priced in the bond market, they can buy it back cheaper at 429 million. So around 440 million due by 2024. But as I said, they have around, 281 million of cash, and it's a cash flowing company. They make a lot of net income, a lot of free cash flow. So this is not really a big concern for me. I don't think the company is going to go bankrupt or go to zero or pretty much anything like that. And they also have a buyback program, which they have been implementing. Now, I'm not sure if they will be able to keep buying back shares at such pace, because now they have to deal with a little bit of debt and a couple of other type of expenses that they have around the wholesale stuff and some expansions they're trying to do. So again, I don't believe they're going to keep buying back at such pace, but we can see that the management is committed to returning value to shareholders through buybacks. Now, taking a look at my valuation model to determine if Capri is a buy or not, I put in 5.6 billion of current revenue, which was the 2022 total revenue. For revenue growth, I put in 4%, although the analysts are expecting around 6%. But as I forgot to mention actually, that there's a pretty big tailwind that is not really priced in this whole company. It's actually the China reopening. A lot of Chinese people, I bet they would like to buy brands like Versace and many of those type of higher end type of brands after they've been locked down for pretty much 2 years. And there's a lot of studies that are showing that they are sitting on record cash positions as they have been locked down for such a long time. So this is another tailwind for the company, which could provide massive growth for this whole thing. And again, it's not priced in Capri outlook of $6.40. This is even pricing in a recession. But again, the China reopening could be a tailwind, which a lot of people are not actually talking about, which could provide a lot of growth for the company. But even with the whole Chinese reopening stuff, I put in only 4% revenue growth for the company for the next 5 years, and I believe this is pretty fair. The net income margins are 14.8%, so I kept it at 14.8%. This is around $1 billion of net income by 2027 using a 10 PE ratio, which I believe is fair. We looked at the company now is trading around 8 times earnings. The mean is pretty close to 13 times earnings, and it traded as high as 31 times earnings. So I believe after this whole recession fear is over and things get back to some type of a normal from now till 2027 at least, I believe the company could at least get back to 10 times earnings. Maybe it could trade at 13 times. We can take a look at the valuation model and see how that actually, changes. But again, taking only 10 times earnings, which I believe is fair, the dividend, which is not dividend, is the buyback. I put in that they're going to buy back 3% of their shares over the next 5 years, which I believe is fair. They were buying around 4 to 5%, but as they might have some debt to actually, deal with, I believe 3% is pretty fair. So with everything we have right here, we have around 79% on the upside over the next 5 years, or 13% compounded every single year for the next 5 years. Now, if we want to take in the average of 13 times earnings, then the company is going to return 128% over the next 5 years, or 19% compounded every single year for the next 5 years. Now, this is really not bad at all, and based on my valuation model, it's actually showing that Capri is a buy. But if I want to bet on the base case scenario of 10 times earnings, I would like to buy Capri around $42 per share for me to actually get some type of a double on the company, which would align a little bit on the charts here around, $43, $42, type of shares. That would be a much, better buy. But nonetheless, looking at, again, my valuation model, it's actually showing that Capri is not expensive at all, and it could actually be a pretty good, buy at those prices. The only way this whole thing could go wrong is if the recession gets much, much deeper, which is likely going to get deeper, if you know from my macro videos, in mid-2023 to later 2023. But again, maybe the Chinese reopening could actually offset the supply-demand dynamics for, Capri. So we don't really know how this whole thing is playing out, and this is why the company is trading, at 8 times earnings. But nonetheless, it's showing that the company is actually, undervalued. It's still on my watch list. I'm still, researching the company, and maybe I open a small position around $42, $43. Maybe not. I'm gonna make, this decision, and I share it with the, people in my group, and maybe I sell puts on it, or then I decide what I would like to do. But nonetheless, I believe it's actually, looks undervalued at those prices. Now, it doesn't mean that it can't get more undervalued. So if the stock goes down another 20%, now I'm gonna get, the trolls telling me, hey, you made a video about this company and it went down 20%. Does that mean you made a mistake? This is not true. Maybe it got more undervalued. Or, I say stock is not a buy, and then it goes up 10%. I get the people telling me, hey, you see, I mean, if I listened to you, I would have missed on 10%. Well, the market is irrational. I'm not here to predict the market. I don't know what it's going to do. I'm just trying to look at the fair value for a company. That doesn't mean that the price is going to move with fair value in the short term. In the longer term, it's going to move with the fundamentals. But in the shorter term, it's going to be driven by many other things which I can't really control in one simple video. So this was my idea for this week. No financial advice. I hope you do your own research and decide for yourself. Again, I hope you enjoyed this video. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another one.